Money in 2023, what tech companies need to know about instant payments and the Fednow service launching this year between May and July. We're about like 3 months away, my friends. So get excited because a lot of changes are happening in the financial system. And we're talking about a lot of money and a lot of opportunity here because we've been following it. We've been following it every year to a T, and we're closer to the grand finale than ever before. And all these things are coming full circle. Stars are aligning on all aspects, and I covered that in the last video. But January 9th, 2023, it's about like 2 months ago. Technology companies in the payment space should pay very close attention to the Federal Reserve's upcoming launch of a long-awaited new payment system, the Fednow service. The system will change the consumer payments landscape by providing a new instant payment alternative to existing retail payment rails. It is rare for U.S. central bank to build a wholly new payment rail, and importantly, the U.S. government has announced its backing for instant payment systems. FedNow promises to both pose challenges to fintech companies whose business models depend on activity over existing payment rails and offer key new opportunities to innovators in the space. These new drivers and risks will be important considerations for many players in the market and critical to their success. The Fed's instant payment platform. An instant payment is a new type of payment from one bank account to another, where the recipient receives final funds in near real time. Enabled by immediate interbank settlement of the payment, this means there is no buildup in interbank obligations, and end users can instantly send and receive money. This is an improvement to payments via credit or debit cards and automated clearinghouse, which come with higher costs or delays to receiving final funds. FedNow, expected to launch between May and July this year, will be the central bank's new core instant payment infrastructure. It will process retail payments in real time, 24 hours a day, 365 days a year, with funds made available immediately for use by the recipient of the payment. That's huge. I mean, even today, I deal with problems like on the weekends, you make transactions and like you don't see it reflect to like Monday, Tuesday, this, that, and the other thing. And all that's going to get wiped away. So eligibility to participate in the new system will generally be limited to U.S. banks. These banks in turn would offer instant payment services to individuals and businesses. The new system is a much needed upgrade to the national infrastructure for retail payments, which is currently closed on weekends and can at times take several days before funds are available. The Fed's ultimate aim is to give consumers and merchants faster access to their funds and greater flexibility to manage cash flow at a low cost with reduced payment risk. A key milestone was the Fed's publication in October 2022 of the legal terms and conditions governing FedNow transfers, which contain granular legal details about the service. These terms reveal important shifts to the status quo and critical ways the service will impact the competitive outlook for retail payments, especially for fintech companies. So as we go down here, the Fed's launch of FedNow this year is significant because it will enable banks of any size to offer convenient instant payments with nationwide reach. This will alter the retail payment landscape in three critical ways. And remember, the overarching goal, like we have this jotted down to a T. We know what they're doing here. And all of these separate countries' financial systems and payment space are getting upgraded. So you're going to have these instant payment mechanisms or instant payment systems on all these countries at their country level, right? So there's UPI, you got the FedNow, you got this, that, and the other thing, you got SIPs in China, and they're all going to have their separate instant payments platform for their respective country. But when it comes to the holy grail of cross-border payments, they had mentioned that it's connecting these instant payment systems of each country with CBDCs and and interlinking them with foreign exchange conversion baked into it, and having maybe a few neutral, common digital settlement assets to be that bridge currency between all of those CBDCs and these new instant payment settlement systems. We got the number. It's the holy grail. And they said within this next decade, it's a stepping stone. It's not like it's going to happen overnight. But ultimately, this is where we're headed. They need to get certain things set up first. And this is a huge leap forward, and especially seeing it from the US. So Fednow will challenge some major players in the payments industry. Instant payment systems like Fednow may ultimately prompt companies that depend on revenue from activity over existing payment rails, such as fintechs and partner banks that rely on credit or debit card interchange fees, to rethink their business models. It will similarly impact established non-bank providers of peer-to-peer payment services, such as dominant fintech companies that offer alias-based payment services, which allows senders to more conveniently make payments using only the email address or a cell phone number of the recipient without having to know their bank info. Understanding the relative strengths and limitations of instant payments will be critical for both these types of entities to adapt. In addition, emerging digital asset payment rails such as stablecoins and cryptocurrencies may appear risky compared to payments over Fednow. To address this problem, it will be even more critical for companies offering these digital asset-based products to adopt robust legal foundations, risk-based measures to ensure regulatory compliance, and appropriate controls to manage operational risks. Fednow will offer a fast, low-cost payment rail for digital platforms. The Fed's legal terms and conditions for Fednow generally limit eligibility to banks, but e-commerce merchants and other digital marketplaces that have accounts with banks participating in Fednow can also take advantage as recipients of instant payments. If these merchants and marketplaces enable an instant payment option that a customer can select when purchasing goods or services online, they would have a significantly lower cost alternative to traditional credit and debit card rails. Digital wallet companies and payment platforms could similarly leverage instant payments to improve customer offerings. Consumers and businesses will be able to immediately fund and defund wallet balances at low cost. For example, they can instantly move funds sitting in a digital wallet to an interest-bearing or wealth management account to more efficiently manage their money, or immediately fund the wallet to make an in-store purchase without a card. Likewise, electronic billing and paying vendors should take note that bill pay is among the core use cases the Fed has pitched for Fednow. Instant settlement of bill payments means that consumers and businesses can conveniently move money immediately from their accounts to biller accounts at any time, and that's going to speed up real fundamental economic growth and development. So fintech companies will have a new central bank platform to provide innovative consumer and enterprise services. The Fed's approach to designing and growing Fednow is new and envisions an efficient, open platform for technology companies to innovate and create ancillary services, end user interfaces, and back-end processing support. A range of fintech companies and service providers such as payment processors, mobile and online banking platform providers, payment hubs, and gateways, and bill pay service providers can take advantage of this early opportunity to contribute to the Fed's ecosystems development. So why does this even matter, right? Why does this even matter? Importantly, the U.S. Department of the Treasury has endorsed the adoption of instant payment systems in its recently issued report on the future of money and payments. I don't know if I've seen that, but encouraging U.S. government agencies to use instant payment services where appropriate. As history has shown with the growth of ACH payments, participation by U.S. government agencies in a payment system drastically amplifies that system's ability to scale and reach ubiquity. While it may take some time for consumers and corporates to change deep-rooted payment behavior, the government support makes Fednow and instant payments well worth watching, not just for banks that are eligible for the service, but also payment processors, end user interface providers, and other fintech companies, as well as retail investors. So takeaways, there's a critical role for technology companies in the growing US instant payment space by rolling out the end user interfaces needed to make instant payments convenient, safe, by offering the processing services that many banks rely on, or by integrating instant payment systems into platforms and products that drive the digital economy. Fintech companies that intend to take advantage of the faster movement of money through this new national payment rail will need a solid understanding of the service's key features, the areas to innovate, and offer tailored functionality within the bounds of Fednow's legal terms, and importantly, the regulatory compliance obligations and areas of emerging risks. So there we go. We got it right there. So the Fed itself has recognized the importance of the contributions of highly motivated and engaged technology companies, service providers in its outreach campaigns. Among other things, the Fed has created an ecosystem accelerator group to promote engagement with the service providers, and a service provider showcase to connect service providers with Fednow banks. Treasury notes in its report, in settings where appropriate, U.S. government agencies should consider and support the use of instant payment systems. The U.S. government sends and receives millions of payments per day. Use of instant payment systems by U.S. government agencies could promote the expedient distribution of disaster, emergency, or other government to consumer payments, potentially providing more rapid support for underserved communities. Boom, right there. Right there. It's a whole mouthful, but man, is it something that's huge in the grand scheme of things as far as all the stuff, the domino effect, right? So I'm going to pull these up. I'm going to pull these for another video, but let's keep going here because this is what I came across. Darren Moore is Project Icebreaker. I think our man's in the Stargate Discord, Santana, had shared it. And I went to the end and I was seeing how David Schwartz was talking kind of like this spiel, but he had said a phrase, a word that made me kind of ring a bell to the other the video that I did on Project Icebreaker, BIS Project Icebreaker, XRP, XLM Bridge Currency, Holy Grail of Cross-Border CBDC. I feel like I was the first one to make a video on that because I was plotting that video for a couple of days and then I was up all night recording it. So definitely go watch that because we nailed a whole lot of connections in here. And what I wanted to go to relating to it was when they started talking about the hub, right? So let's go to that, the hub. Two domestic peak in enterprise blockchain and crypto solution payments, and then because of that hub, right? And then even just the thought of Ripple's liquidity hub. So Ripple Liquidity Hub is an enterprise blockchain and crypto solution set to be launched in 2022. Will allow customers to buy, sell whole crypto, everything that they're talking about there as well too, with this kind of interoperability in this whole kind of webinar in the face of fragility CBDCs. They talked about this interoperability aspect and everything that they're saying in the Holy Grail, everything that they're saying in this video. And then now with Project Icebreaker and you seeing that, it's everything that they're talking about there as well too. And then also with the bullet train, right?
Is not just between two currency, as I mentioned, it can be extended. Challenges, and I'll stop here.
This is huge.
AML issue. We haven't really dealt with that. It wasn't one of the issues in the project, but that will be an important issue going down the road in extending it. The important question down the road, who will build this hub if we do it globally? Is it going to be a consolidation of central banks, international bodies like IMF, BIS, private companies like SWIFT or others? So I'll stop here for now.
Look at that smirk. He said or others after saying SWIFT. Give me a break, man. But that's not what I want to show you. I want to show you this experiment for a new architecture for cross-border retail CBDCs. On top of what I just showed you for this interview,
systems can be linked together.
Here we go.
To enable efficient international payments.
And this is exactly what I was talking about at the beginning of the video as far as these separate instant payment systems interlinking together for that interoperability and then through CBDC and then having that foreign exchange conversion baked into it. It's the Holy Grail. It's the Holy Grail.
Can be linked together to enable efficient international payments. Project Icebreaker is exploring a specific model linking national retail CBDC systems together. The Icebreaker Hub routes payments and allows national CBDC systems to talk to each other, despite being based on different technologies. In this project, different distributed ledger technologies used by each country for their proof-of-concept CBDC systems were connected to the Icebreaker Hub. Let's see how this works.
There we go. So the hub, this Icebreaker Hub, right? All right. So now let's go to what David Schwartz was saying, right? So let's play it.
Ripple improves international payments for enterprise customers by building a modern, interoperable international payment and settlement system, RippleNet, based on blockchain technologies. Our ultimate goal we call the Internet of Value, payments as easy as email for enterprises of all sizes and for consumers around the world. Obviously, we're not going to build that all by ourselves. It's an audacious goal. And in 8 years, we've learned a lot about where the challenges are, but also where the opportunities are. The good news, CBDCs can make domestic settlement faster, more reliable, and less costly. And that's important. You can't have good international payments without good domestic settlement. International payments are more important than you might think because they're just so inefficient today. They often simply don't take place. Most emails wouldn't have been sent by postal mail if we didn't have email. The communication simply wouldn't have happened. An enormous amount of valuable commerce simply doesn't happen because international payments are so slow, unreliable, costly, and complex. The opportunity is enormous. There's typically a domestic transfer on each end of any international payment. If those don't work well, the international payment doesn't work well. And equally importantly, if you imagine an international settlement system with great characteristics like speed, certainty, low failure rates, those benefits won't be seen by the endpoints of the payment unless the domestic components on both ends of the international payment have them too. Countries that don't modernize their domestic systems will not see the benefits of the revolution in payments taking place today pushed to the endpoints in that country.
See that? So like it is a must that all countries set up this their own respective instant payment systems and incorporated within that interoperability. It's a must, and they're pushing for it.
CBDC distribution will almost certainly have to happen through intermediaries, banks, wallets, fintech companies. Central banks don't have the scale to provide direct-to-consumer services,
and the public won't accept it. You were seeing it in Nigeria. So 100% agree with David Schwartz here.
It makes no sense for central banks to try to scale up to replace consumer financial infrastructure. In working to build modern international payments, we've discovered that the biggest obstacle is very often the last hop, getting the funds to the payment recipient through the domestic payment system. But lacking connectivity to consumers, CBDCs won't solve the last mile problem that has made modernizing international payments so difficult. Fortunately, domestic systems are modernizing. SEPA, Singapore, others have very strong domestic systems. The US is implementing Fednow, though that won't be live for another few years. It's important that these payment systems are built on newer technologies that are compatible with each other. At a minimum, they won't be able to confer the benefits of improved international settlement to the payment's originator and recipient if they aren't modernized. At worst, those payments won't work at all. Even if you imagine some future with one world asset, we won't get there unless the new one world asset is compatible with where the value is today. So either way, compatibility is key. The world's value today is spread out among systems that don't interoperate with a massive number of bespoke and quirky interconnections, band-aids. Companies that handle large numbers of payment endpoints need hundreds of people to maintain their payments infrastructure and handle the complex treasury operations needed to handle funds in dozens of payment systems. If someone wants to compete with companies that have this kind of payments infrastructure, the answer can't be that their new startup hire 100 payment engineers and a dozen treasury operations people. That's a non-starter. So there's an opportunity here to bridge domestic real-time payment systems such as Fednow, clearinghouse for US dollars, with powerful benefits for small and medium enterprises and ultimately consumers around the world. We need to build systems with common principles just as the internet was built. Today, many computer networks are effectively just part of the internet, but this wasn't always the case. As many of you may know, Cisco rose to dominance among competitors because they could make legacy systems that were already there connect to the internet, while competitors frequently required you to build new internet-like networks. Today, most networks look like the internet, and this isn't a concern, but it took interoperability to get there. There was a long transition period. We're not going to build a new financial system tomorrow and everything magically move to it. That's not realistic. Payments and settlement are in that pre-internet state. There's still that huge mismatch. It's walled garden after walled garden with limited interoperability through a massive number of limited interconnections. Liquidity is spread out, and enterprises need to keep money spread across these systems when they don't know which domestic payments they'll need to make next in which countries. The result is high cost due to trapped funds and the need to pre-fund transactions, often days in advance. So two problems we need to be mindful of when we talk about stablecoins and CBDCs. Stablecoins are always going to be tied to a single fiat currency by definition. There's probably not going to be one winner at the end of the day. There definitely won't be a single stablecoin or single fiat currency that everyone in the world uses anytime soon. The US dollar has been the world's reserve currency since the Bretton Woods Agreement, 1944. But as we've seen, particularly this year, that status has been weakening. I don't think the US dollar being fully replaced as the world's reserve currency is likely in the near term or even over the next few decades, but its position is becoming more precarious. Pandemic uncertainty is forcing consumers and institutions to look at other safe haven asset classes, even cryptocurrencies, and the rise of other countries, particularly China, trying to dethrone the US dollar. Being tied to USD also brings jurisdictional ties as well that are, let's be realistic, increasingly unwanted in many parts of the world. Today, many sovereign countries around the world want independence from such a system that gives jurisdictions like the US and the EU extraterritorial control over systems in those sovereign countries and regions. Saudi Arabia, for example, wants a payment system in the Middle East that respects their sovereignty. If each country issues their own CBDC or starts using stablecoins denominated in different regional currencies, we risk repeating this mistake yet again. We drastically need interoperability between these virtual currencies and between virtual currencies and traditional assets and systems. A CBDC, by definition, is going to carry the same capital controls, trade agreements, politics as its corresponding fiat currency did, and countries are not going to want to deal with another country's capital controls, nor should they. They're sovereign nations. A world currency issued by a world jurisdiction that everybody uses for everything is a pipe dream. Our choices seem to be between an interoperable future with a few jurisdictionless settlement assets or more balkanization. If you're looking at cross-border, that key factor is interoperability. You're working across jurisdictions and across assets. You need a neutral asset in between different CBDCs, or your liquidity is going to be divided among the n-squared pairs of CBDCs. Similarly, if other assets, such as securities around the world, get tokenized, there's even more need for a neutral asset between multiple CBDCs and possibly a large number of new assets in new asset classes. A central bank is not going to issue a digital asset that behaves like BTC, XRP, or Ethereum. These are neutral assets that are free from a single jurisdictional control. So CBDCs are not going to usurp the role of universal settlement assets. You need a neutral asset going in between CBDCs serving as a settlement across jurisdictions, accepted by all because everyone can come to accept that they can't get the whole world to use an asset they control. And so an asset nobody can control is preferable to one controlled by their geopolitical competitors. Bitcoin is sometimes pitched as the interoperability solution, and in the early days, that almost seemed believable. But as we now have some 1,500 cryptocurrencies that don't interoperate, and almost nothing non-crypto interoperates with Bitcoin, we just early days that almost seemed believable. But as we now have some 1,500 cryptocurrencies that don't interoperate, and almost nothing non-crypto interoperates with Bitcoin, we just recreated the new version of the same walled garden problem. Instead of building an internet based on compatibility, we built one network and required everyone to join that network, demanding too many sacrifices too quickly. Internet without Cisco. So it can't be just one network. And if there's one network at the hub, that network has to be built for that role, with interoperability taking priority over everyone do things our way. It has to be based on bridges, not on walls. XRP and the XRP ledger were built specifically for this kind of role. The XRP ledger was purpose-built for transacting in both a native neutral asset, XRP, and also in issued assets, a bridge to CBDCs, stablecoins, other payment networks, and other kinds of assets such as securities. The XRP ledger has asset issuance built into the protocol. Issuance, authorization, payment, settlement, and exchange are native operations with simple APIs. Issued assets can represent fiat currency, securities, or anything else of fungible value that works like a currency. But of course, the XRP ledger can't handle all the world's payments. And I'm not proposing a one network solution. That's totally unrealistic. People want different things, and different countries have different problems. But XRP can be the hub or backbone that provides the fast international settlement piece, competing with other possible solutions to that same problem. It won't solve the last mile problem, but it will help with interoperability and concentrating liquidity so enterprises don't have to keep funds in every payment system they might need to make payments in. Just to repeat what I said at the beginning, CBDCs can make domestic settlement more efficient, and that's very important. You can't have good international payments without good domestic settlement. But they're not enough by themselves, and expecting them to bring benefits to small and medium enterprises and consumers and users is unrealistic unless we do a number of things. One of the things we discovered at Ripple is that you can give an enterprise a fantastic payment rail, and they'll still be hesitant to push the benefits to their customers because it makes the less modern parts of their system seem worse or unacceptable. It's often better to only provide payments that settle in 2 to 3 business days than to sometimes provide instant payments and sometimes provide payments that settle in 2 to 3 business days. People will now be more dissatisfied with the slower payments than they would be if you didn't seduce them with the better experience they only sometimes get. Perverse, but a fact. To some extent, you have to do everything to do anything, but CBDCs definitely can have a role to play. It just still leaves getting to and from the end user and interoperability across jurisdictions and different fiats. And those are very important components if we want to make things better. Thank you.
So after watching this video, I mean, he really spelled it all out. He addressed a ton of things. The one world currency, he addressed the Holy Grail, he addressed the hub, he addressed basically everything that unfolded in that project Icebreaker. And this seems like it was a couple years ago because he said that Fednow wouldn't launch until a couple years. So now we're here, and right now everything is lining up to what we've been waiting for a long time. And it seems like we are very much on the right track of how this is unfolding as we speak and how it's going to unfold in the future. There's not going to be just one common settlement asset, and the XRP will be one. I would say XLM will be one. HBAR could be one. You know what I mean? Like, it's not going to just be one. I do know, based off of all the things I've seen over the years, is XRP and XLM will both be a part of it. So if you're new here, subscribe, hit the notification bell, get updated in real time when we drop these market updates, newsletters, deep dives. Come join the Discord, and I'll see you guys in the next video.